Nigeria inflation rate eased to 18.02% in September compared to 20.12% in August 2025, indicating the sixth consecutive month of deceleration in inflation. This was disclosed by the National Bureau of Statistics in the latest Consumer Price Index published on Wednesday. This also marked the first time in 3 years that the inflation had fallen below the 20% threshold. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okere. The rebasing of the CPI has been a driver for the decline in inflation this year, which has resulted in the first rate cut by the Monetary Policy Committee of the Central Bank of Nigeria in years. The sustained dip in inflation supports the projection by the economists that the NPC may cut the benchmark rate. According to NBS, the September 2025 headline inflation rate decreased by 2.1% compared to previous month on a year-on-year basis. The headline inflation rate was 14.68% lower than the rate recorded in September 2024 with 32.70%, marking a decrease compared to the same period in the preceding year. However, on a month-on-month basis, the headline inflation in September 2025 was 0.72%, which was 0.02% lower than the rate recorded in August 2025 with 0.74%. This means that the September 2025, the rate of increase in the average price level was lower than the rate of increase in the average price level in August 2025. Disclosed part of the report, the food inflation rate in September 2025 was 16.87% on a year-on-year basis. This was 20.9% points lower compared to the rate recorded in September 2024 with 37.77%. NBS stated that the significant decline in the annual food inflation figure, which is technical due to change in the base year, however, on a month-on-month basis, the food inflation rate in September was 1.57%, down by 3.22% compared to August 2025, with 1.65%. The decrease can be attributed to the rate of decrease in the average price of maize, corn, garri, beans, millets, potato, onions, eggs, tomatoes, fresh pepper, and some other ones. Core inflation, which is all items less farmer produce and energy food, stood at 19.53% in September 2025. On a year-on-year basis, it declined by 7.9% when compared to 27.43% recorded in September 2024. The rural inflation rate in September 2025 dipped on a year and monthly basis. It stood at 18.26% and 0.67% at the state level. The headline inflation rate on a year-on-year basis was highest in Adamawa with 23.69%, Katsina State with 23.53%, and Nasarawa State with 22.29%, while Anambra with 9.2928%, Niger 11.79%, Bauchi 12.36% recorded the lowest in the headline inflation on a year-on-year basis. On a month-on-month basis, however, NBS says the highest increase were recorded in Zamfara State with 9.36%, Adamawa with 8.15%, and Nasarawa with 7.49%, while Niger with minus 8.14%, Oyo minus 5.56%, and Bayelsa minus 4.61% recorded a decline. Year-on-year inflation, food inflation was highest in Ekiti with 28.68%, Rivers with 24.18%, and Nasarawa with 22.74%, while Bauchi with 2.81%, Niger with 8.38%, and Anambra with 8.41% recorded the lowest rise. On a month-on-month basis, food inflation was highest in Zamfara with 15.62%, Ekiti with 12.77%, and Sokoto with 12.55%, and lowest in Akwa Ibom with minus 12.97%, Borno with minus 12.95%, and Cross River with minus 10.36%. Ahead of the release of the inflation data, the senior research analyst at the FXTN, Lukman Otunuga, had projected an easing in the inflation to 18.8%. He had pegged his projection on a combination of softer food and a strengthening naira may have tamed price pressure. Further signs of the cooling price pressure may pave the way for further rate cuts by the CBN in November to stimulate economic growth. The Security and the Exchange Commission has announced plans to transition Nigeria's capital market from a T+3 to a T+2 settlement cycle to enhance market efficiency, reduce risk, and strengthen investors' confidence. The Director General of the Commission, Emomotomi Agama, disclosed this at the Trade Association Roundtable on ensuring stakeholder readiness for the T+2 settlement. Agama says the transition represents a major milestone in Nigeria, aligning capital market operation with international best practice, noting that it will make the market more competitive and resilient. The SEC boss added that the new system will also boost market liquidity by returning capital to investors more quickly, allowing its redeployment and fostering greater market activities. He explained that by shortening the time between trade execution and final settlement, the T+2 system will lower market exposure and minimize potential default, adding that faster settlement will improve liquidity by returning funds to investors sooner, thereby enabling reinvestment and greater trading activities. Agama noted that several advanced economies have already moved towards T+1 settlement, stressing that Nigeria must continue to evolve to remain globally relevant. The global financial landscape is constantly changing, driven by technology and investors' demand for efficiency. The transition to T+2 is therefore a strategic imperative to keep the market competitive and future ready. He emphasized the success of the T+2 transition will depend on the collective readiness of all market participants, from brokers and custodians to clearing houses and investors. Agama urged stakeholders to engage constructively and collaborate to identify potential bottlenecks, share best practice, and agree on a clear roadmap for implementation, reaffirming the Commission's commitment to providing the necessary regulatory support and guidance. He described the move to T+2 as a resounding step towards efficiency and global competitiveness, positioning Nigeria's capital market for sustained growth and improved investors' confidence. Various stakeholders at the Nigerian Investors Forum held on the sideline of the World Bank IMF annual meeting in Washington, D.C. says they are encouraged by the reform which unified the foreign exchange market, providing greater transparency in the sector. The central bank governor and the leader of the Nigerian delegation to the meeting, Olayemi Cardoso, assure investors of the government's commitment to advancing reform and unlocking opportunities for sustained investment and growth. The Minister of State for Finance, Dr. Doris Uzoka Anete, was among the top government officials who joined Cardoso at the event organized for interaction with foreign investors on the commitment of President Bola Ahmed Tinubu's led administration to creating an enabling environment For foreign investment, the CBN governor highlighted the country's robust economic fundamentals, citing $43.4 billion in external reserve, the highest level in 5 years. Cardoso expressed optimism about Nigeria's economic prospects, emphasizing the government's commitment to strengthening the economy and promoting sustainable growth. The CBN Deputy Governor on Policy, Mohammed Abdullahi, elaborated on the significant improvement in foreign exchange inflow, with monthly turnover in the forex market rising by 56.4% to $8.6 billion in 2025. The special advisor to the President on Finance and Economy, Sayande Okoli, in a presentation, reiterated the federal government's commitment to achieving 7% economic growth by 2027 to 2028 through diversification and investment in infrastructure. She added that in the second quarter, 13% of sector grew above 7%. The dependency on oil for total exports has reduced to about 57.5% in the first half of this year compared to last year, and oil now accounts for 4% of the GDP, down from 8% in 2021. Dr. Uzoka Aniti presence at the event demonstrates greater synergy between fiscal and monetary authorities in the federal government's commitment to creating an enabling environment for foreign investment and the pursuit for economic growth and development. Let's take a listen to what the Nigerian delegation at the IMF World Bank annual meeting have to say.
Nigeria's focus remains clear: strengthening our fundamentals, advancing reforms, and unlocking opportunities for sustainable investment and growth. We are encouraged by the progress made so far and remain confident that the ongoing reforms are laying a stronger foundation for a more resilient and globally competitive economy.
We do now have deeper and functional financial markets, much more robust and transparent. There's been a significant increase in the average monthly turnover to $8.6 billion monthly in 2025 versus an average of $5.5 billion and much less in the year before.
If you make money in Nigeria and you don't pay tax there, you will pay it in your home countries. So why do we want to lose our tax base to another country? One other thing we've done is to reduce your risk as an investor. Before, you will pay capital gains tax at 10% on isolated gains. The losses were ignored. The reform says we do net.
So there's new external borrowing in the budget, and in US dollar terms, it's about over $2 billion. Then some of you would also know that we have a maturity Eurobond in end of November. It's about $1.118 billion. Some of you are interested in that as well. So what we are working towards, subject to market conditions and subject to the advice of our transaction parties, is to be in the market later this year to issue Eurobonds for a total amount of $2.3 billion.
That was the Central Bank of Nigeria Governor Olayemi Cardoso and other delegates at the World Bank IMF conference at Washington, D.C. With renewed assurance and a strong message of confidence, Nigerians seek to deepen partnership and attract more global investment to drive sustainable growth. Let's take a quick break. We'll be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Point, where we extract the Nigerian economy and the government policies. The Naira dipped for the third consecutive day as it closed trading on Wednesday at 1,473 Naira to a dollar from the start of the week. The Nigerian currency had struggled against the American dollar at the official Nigerian foreign exchange market. Data from the Central Bank of Nigeria indicated that it started the week with at 1,457.51 Naira to a dollar, weakened to 1,463.23 Naira to a dollar on Tuesday, and dipped by 10.06 Naira, that is 0.69% on Wednesday. At the parallel market, the currency closed trading at 1,500 Naira to a dollar on Tuesday. According to Cardinal Stone, however, on Wednesday, it appreciated to close trading at 1,488 Naira to a dollar. Experts at the Cowrie Asset Management Limited blamed the diminished appetite for the depreciation of Naira. Depreciation of Naira comes on the heels of the Naira hitting a 10-month high in the past weeks as it closed the trading at 1,455.17 Naira to a dollar, the strongest it had been since December 2024. Cowrie Asset Management Limited, in its weekly report, warns that rising import demand or weaker dollar inflow could slow further gains. Oil price may remain under pressure due to higher supply, but the rebound in the global market, in the global demand could offer some support to Nigerian external earning condition, underpinning optimism for FX market stability. Volatility in global market oil may keep investor sentiment cautious. However, the external reserve have continued their steady climb. As at Monday, it stood at $42.63 billion, up from $42.59 billion on Friday. Before we call it a wrap, let's take a quick look at the stock market. The Nigerian Exchange Limited on Wednesday extended its gaining streak as the equity market added 20 billion Naira in value, bringing the total market capitalization to 93.83 trillion Naira at the closing of trading. The benchmark all-share index advanced by 31.24 points, that is 0.02%, to settle at 147,742.2 points, reflecting sustained investors' interest across key sectors. Despite a slowdown in the market activities, at the close of trading, investors exchanged 388.9 million shares worth 12.36 billion Naira in 22,986 deals. This represents a 21% decline in volume, a 29% drop in turnover, and a 10% fall in number of deals compared with Tuesday's session. A total of 127 listed equity participated in the trading, ending with 33 gainers and 28 losers. Sky Shelter Fund led the gainers chart with a 9.88% rise to close at 418.75 Naira per share. Royal Exchange followed with 7.37% gain to end at 2.33 Naira, while International Energy Insurance and Julius Berger appreciated 6.05% and 5.51% respectively, to close at 2.98 Naira and 134 Naira per share. On the loser chart, Triple G and Company emerged as the worst performing stock, shedding 9.91% to close at 4.91 Naira. Industry and medical gases dropped by 9.87% to 32.40 Naira. UAC of Nigeria lost 6.46% to settle at 68 Naira, while Ella Lakes declined 4.66% to 13.30 Naira per share. Fidelity Bank recorded the highest volume of trade for the day with 46.9 million shares valued at 942.31 million naira, followed by Chams with 24.8 million shares worth 101.42 million naira. Zenith Bank traded 20.8 million shares valued at 1.42 billion naira, while Access Holdings accounted for 19.2 million shares worth 495.35 million naira. In terms of value, Zenith Bank topped the chart with 1.42 billion naira, followed by Nigerian Breweries with 1.27 billion naira. Fidelity Bank with 442.31 million naira, GTCO with 869.05 million naira, and Stanbic IBTC with 723.52 million naira. Performance across the major market indices was largely positive. The NGX Top 30 index by 0.07% and Consumer Goods Index gained 0.09%, while the NGX Pension Index and Industrial Index appreciated for 0.09% and 0.08% respectively. Meanwhile, the Premium Index closed higher by 0.04%, buoyed by renewed interest in banking and industry stock. Overall, the market has recorded a one-week gain of 1.39%, a 4-week rise of 4.38%, and a year-to-date growth of 43.54%, indicating sustained bullish sentiment among investors. Analysts noted that despite profit-taking activities in some counters, market fundamentals remain strong, supported by impressive third-quarter earning expectation and increased positioning by institutional investors. All right, this is where we call it a wrap on Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 276 on Star Times. To stay connected, kindly follow us on all our social media platforms using @Global TV NG. Till I come your way again, I am Kike Lomo Okere. I celebrate you all.